we've been able to export our inflation. We run these enormous trade deficits, so we print all this money, but then we send the money to China, and China sends us products. So we get goods to consume that we didn't produce, and the money is sent to China, and that gets recirculated into U.S. financial assets, keeping our interest rates down, keeping our stock prices up. And so that's how we've been able to manage to create all this inflation, but maintain, a smaller increase in our cost of living. But now that all that's breaking down, and if America is going to have to start producing more domestically and deal with the domestic cost structure, prices are going to go through the roof if we can no longer import the stuff that we consume, and if we can't pay for it by exporting our money. If the money we print gets trapped in the U.S., if it stays here bidding up prices, prices go ballistic. And the reason the Fed was able to maintain all this stimulus, to do all the QE, they hid behind that veneer of low inflation. There is no more basis that the Fed can hide behind to justify continuing this policy. And so if they have to withdraw it, then everything that was built on top of it will collapse. I think the problem that was really exposed by COVID was the problems created by governments and central banks, where there is inadequate savings, where too many people are living off of debt. Had we had the type of economy that we had, let's say, going into the Second World War, where we had a much bigger crisis than COVID, tons of money from middle-class Americans by selling them war bonds. But when COVID hit, nobody had any savings. Everybody was loaded up with debt. Nobody could stay home from work for a month. Nobody had reserves to pay the rent, to pay their bills. If you lost a paycheck, you couldn't pay anything. And we had this entire house of cards created by the government and the Federal Reserve, where we had nothing saved for a rainy day. I think we're going to be worse off because of what the government did, because they printed all this money so we can keep spending it. But what the government didn't replace was the lost productivity. They can print all the money they want, but if people aren't working, if they're not producing goods and they're not producing services, the money they're printing has no value. And all that happens is prices go up. And we're just at the tip of that iceberg. But whenever they create fiat money, they destroy the value of the money that already exists. They don't add any value to the economy by printing more money. They just cause us to have to reprice everything. So the more money they print, the more expensive everything becomes. Nobody gets richer because you increase the quantity of money. You only get richer if you increase the quantity of stuff. Well, I think when it comes to investing, I think 2021 represented the actual peak of the speculative mania, where investors threw all reason and caution to the wind and just piled into anything that was going up. I mean, because you had the popularity of meme stock investing. You had, Cathie Wood with her innovation ETF. You had NFTs and cryptocurrencies. I mean, you name it, as long as it was going up, people bought it. And there was no limit to how high a price people were willing to pay to jump on a bandwagon. I think you're going to see a much bigger investment in real things as opposed to fake things or digital or fantasy, into real things, real industrial metals or agricultural commodities or energy. Real stuff is going to come into vogue again. In the past, the Federal Reserve was able to get away with QE programs because it could point to a CPI that was below 2%, and that was the justification for the policy. But what happens if we get a stock market crash and inflation is 8% or 10%? What if it's inflation that is the reason the market is crashing? It's hard to imagine the Fed coming to the rescue of the market by creating even more inflation when inflation is the reason the market is crashing. And maybe the bond market is crashing because of inflation. And so if the Fed creates even more inflation to prop up the stock market, that's going to be an even bigger drag on the bond market. So it's a very difficult situation now that the Fed is in, because the only way the Fed could do another round of QE in a world of high inflation is if it's willing to accept even more inflation. Hyperinflation is basically the death of a fiat currency. It just means that the money is losing value so fast. We're not talking about 10% inflation a year or maybe not even 10% a month, but maybe 10% a week, or even a day, because nobody has any confidence in the currency. And so the minute you get it, you want to get rid of it, right? The velocity just explodes because currency becomes like a hot potato. Within an economy, the cost of some goods could go up to produce. But if that happens, then it's going to divert demand away from other goods and services that people can no longer afford because certain goods are more expensive. So the overall price level won't go up. What enables all prices to go up is the government printing more money. Inflation is always about money creation. So the only way you have this excess demand that exceeds what you are capable of producing is if the government supplies it with money. And then the way the market corrects that is just repricing everything higher. And then we call that inflation. But the cause of it and the real definition, and if you go back to an old Webster's dictionary and you actually look up inflation in an old dictionary, it will define it as an expansion of the supply of money. That's what the word literally means. You can't inflate a price. Inflate means to expand. That's literally the root of the word, expand. So when you expand the money supply, you can do that, right? You can expand money supply. Deflation contracts money supply. You can't expand a price. You can't contract a price. Prices rise and prices fall. So it would make no sense to refer to rising prices as inflation. The reason it's called inflation is because you're inflating the money supply. You're expanding the money supply. You cannot inflate a price. Well, when I talk about the price of gold, I'm really looking at it from the other direction. It's the value of the US dollar. So how low is the dollar going to go? How many dollars will you need to buy an ounce of gold? There's no way to know. I mean, there's actually no ceiling on the price of gold because there's no floor on the dollar. I mean, if we have hyperinflation, the worst case scenario, it won't matter how many dollars you have. You could have trillions and you won't be able to buy an ounce of gold. Now, I don't expect that. Hyperinflation is not my base case scenario. It's just an extreme worst case scenario. But I do expect the dollar to lose a considerable percentage of its value relative to gold, way more than 50%. I would say on the magnitude of 70 to 90% of the dollar's purchasing power is going to be lost. So if the dollar were to lose 90% of its purchasing power, the price of gold would go up tenfold, which would put it at 20,000, right? And that might be an extreme, but I don't want the government to get involved in the economy at all. I mean, there's a role for government, but managing the economy is not the proper role of government. I want a free market economy. I want resources allocated by supply and demand. I don't want governments trying to micromanage an economy